Did you know that to make the most out of your investments in the long run, you need to invest in a right mix of asset classes? Also, your investment needs to be flexible enough to adjust to changing market conditions. The SBI Dynamic Asset Allocation Fund dynamically allocates investments into equity, debt, or cash based on market movement and economic conditions. Asset allocation is an important part of the investment cycle, and as the name suggests, this fund dynamically allocates money in different asset classes. Let's have a look at the different asset classes. Equity. The upside generates long-term wealth, higher potential for gain, potential hedge against inflation. The downside. High risk, higher volatility. Debt. The upside generates regular income, lower risk, potential to preserve capital in times of downturn. The downside. Conservative investments. Returns may not beat inflation. Cash. The upside provides high liquidity, safe avenue for parking extra cash. The downside, very low inflation-adjusted potential returns. How does it work? SBI Dynamic Asset Allocation Fund decides on the right mix of allocation into equity, debt or cash based on market movements and economic conditions. The allocation to an asset class is based on a quantitative investment model in which the allocation is done dynamically. So how do you benefit from this fund? Model-driven dynamic asset allocation. No emotional bias. Operationally convenient. Designed for the changing market. So, keep up with the changing market dynamics with SBI Dynamic Asset Allocation Fund. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.